The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to a gorgeous day here at the headquarters of Technical Trading Investing. It is TFNN.com. And we got the 7th of March moving quite along here. We got some decent amount of news out today for a market that's moving nowhere. And we will continue watching closely. Let me get a few things set up here. Got an air conditioner that sounds like it's got something going on inside. Maybe it's possessed over in the corner, or maybe it's a jet fighter coming by the side of the building. I never can tell, but always interested. Anyway, what do we have going on out here? Apple, wanted to check it today. AAPL. What did I want to bring up on this? Well, we had some news out from Asia, and let's see if that's actually right. March 7th. Got down to about 421 today, and what was going on? It is going after this 419 low that we saw on March 4th. And it's kind of interesting in that what the news was is a company that makes the touch-sensitive surface for iPads and iPad minis basically was kind of tired of being screwed over a number of years by Apple, and I'll basically tell you how this works. You've got a company, and basically, you know, they do a huge amount of business with you, and kind of like Walmart, they keep in every day. They keep in saying, "Hey, we need to cut the cost on this a nickel. We need to cut the cost on this a dime. We need to cut the cost on this 50 cents. And every day they're there with their hand out trying to get you to sell your product, which you make fine, that they like to, just at the beginning, no problems. And just say, you know, we're going to go to someone else. And, of course, you've hired 500 employees to build this whatever product for them. So now you've got a huge capital investment. And the question is whether you want to throw all that out. You bought a bunch of machines. You spent a lot of money training these people. And so is 80% of the pie better than 100% of the pie? Well, these guys just sit there and nickel and dime you forever. Well, what happens one day? Samsung decides to pop up out of the primordial ooze and throw some cash at these guys and say, screw Apple. They've done nothing but stick it to you for the last year and a half. This product's come out, and you've watched your margins deteriorate on, your product hasn't become less worthful. All they've done is decided to take any profit you had and give it to themselves. What are you helping these guys out for? And that kind of hit Apple at the beginning, trading at 426 now. So somewhere in the medium of that. Let's see, what was the 421? Still didn't test that 419 low. I suspect that we're in just a little bounce. Apple still looks like it's going to be heading to 395. 385, somewhere in that area would complete an ABC 1-to-1. In fact, I'll pull that up on Tiger TV so we can actually see this. But it's part of a larger ABC. And let's see, expansions. And there we have it right there. It is a fairly easy ABC to take a look at. Your 1-to-1 comes to right at 395. Your A point is the high of September 21st. Your B point is the low of November 16th. And your last high is December 3rd out here. It retraced basically 44% of the move down from 705 to 505. And it's continued moving down. You've got a couple of bounces. You could almost say that there's some smaller ABCs into this ABC. But we are within the comfort zone of finding that 1-to-1 that comes in right at 395. Could it do a bigger bigger ABC? I don't suspect so. I think we're probably going to be coming back into a line where people might be wanting to pick it up in that 390 range. But I think it's led the market up, and it's now leading the market down. We'll have to see how that continues on. Wanted to just check in real quick and see what a volume is doing for us today. And we're 1541 on the S&P cash. We've had about 8 different tries to push this thing through 1545. Haven't gotten it. Pretty much waiting for jobs numbers in the morning. I suspect that they will be pretty weak, and I think we're probably going to be coming back down at least to the 1525 area. The volume tomorrow is probably going to tell us whether or not we're going up to 1600 on the S&P or down to 1325, which is, I think, is longer term, probably the next 3 months. We're probably looking at that some kind of 1600 level in which no matter how much money the Fed and Bernanke throws at the money, it's probably not going to go any higher, and certainly could roll over to 1325 on the recession that's in full bloom in Europe, no matter how much they don't want to talk about it. GDP numbers did come out for all of the Eurozone on Tuesday. I put it in my newsletter. It is accelerating strongly down, not up. And we're going to probably start seeing those job numbers head back up here. There are enough people that were in the under 50 employee range that fired a number of people to stay out of Obamacare. And I suspect we're going to start seeing those folks show up in those unemployment numbers. It just... basically now you almost have to be able to hire about 50 people to grow your business to make it worthwhile. You've got to go from about 50 people to 200 people to start making money again. One of the things I did in the 80s was take bus trips on Friday night to go out skiing, and eventually ended up just taking a 2-week vacation after a number of years. And it was very interesting to see. Of course, this is what, mid and late 80s. But I'd get on a bus at 6 o'clock in a parking lot somewhere, park my car, and get on this bus. It was a sleeper bus. Everybody would party to about 11 o'clock that night on the sleeper bus. Go to sleep at about 7:30, 8 o'clock in the morning. They let you off at the base of the mountain in Colorado somewhere. And you got to ski all day. Well, ended up staying for a week or two at a hostel with a bunch of Australians. And it was the first time I saw this phenomenon. But what would happen would be that the way that the taxes were set up, that once they made about $50,000 a year, they had to make about $80,000 a year to make another dime. So what did they do? They just said that's it for the year, and took off. And they'd be up there for 6 weeks. And, of course, at $15 a night for the hostel, it wasn't that bad. You could go take a vacation. So they'd save the money when they worked. Then they'd just go ski and drink Fosters all day and play the beer hunter. If you've never played the beer hunter with Australians, you've never lived. That's where they take a lot of those big 24-ounce beers. They put them out at about negative 10 degrees outside, let them good and cold. They shake up one of them, and then they randomly hand out the beers, and you have to open up on the side of your head. So one guy ends up getting his head blown off by a Foster's tall boy out there, and of course at 10 degrees or minus 10 degrees, it instantly freezes on the side of your head. But those guys, boy, what drinkers. They could drink 12 or 16 of those in a day up there on the mountain. I drank one of them, I'd be drunk. I just never could do it. But boy, they were professional drinkers, partiers. Australians, kind of a wild bunch. But that was the first time I really saw that people would vote with their feet, and as soon as they knew they couldn't make another dime, they weren't bothered to show up one more day. And Australia's continued to move to that socialist level, and I continue to see more and more Australians here that have a little motor in them, that want to go get a little bit more than just what the government allow, showing up around here. And Actually talked to a comedian not too long ago. He's got a new show on TV and everything. And he had to leave Australia. Then he went to England, and because he was Australian, they wouldn't hire him. So he came to the U.S., and now he's pretty successful. Anyway, 1541. Let me update this real quick. I've been distracted. Took a left turn on there. Where is it at here now? Yeah, 1542. 2.4 billion shares. Yeah, so we're doing about what we've been doing, which is about 3.5 to 3.7 billion shares on the consolidated New York Stock Exchange tape this week without much going on. Other things out there. So Apple basically getting shivved by one of its suppliers because Samsung said, hey, we'll give you a lot of money, and all you have to do is say you're not going to give Apple a couple million of these devices, and we'll pay 5-10% more than they will. So Samsung doing something pretty wise out there and green-mailing a company to cut Apple out. And, of course, Apple having no friends because they've been screwing people over to continually get margins higher, something that is great when you have a bunch of very small customers that you don't care about. But if it is the lifeblood of your product, in this case, the touch-sensitive membrane that goes on the front of an iPad, a big problem. And I think that they're doing a little bit of damage repair on Apple. A little of this was expected, but a lot of the pressure that we saw this morning on Apple was that. Something that should be fixed and is not, and is just getting out of control, or out-of-band reporting. Gap was supposed to report after the bell tonight. Of course, it came out about 11 o'clock, shortly after the stock was halted, and then actually let the information come out everywhere. But it seems like every week now, or every 2 weeks, we get some kind of report that just accidentally sneaks out in the middle of the trading day. Just the old honest mistake, and sorry, I'm not buying it anymore. They always say that some vendor did it, that we're going to fire them, and of course they never do. It was purposeful. I don't believe it anymore. The old honest mistake of these things just randomly coming out, and GPS is I always hated this symbol for Gap. Why shouldn't it be Gap? Why shouldn't it be GPS like it's a global positioning satellite company? But what it did was rocket right up to the previous levels that it had found before. Let me see if I can pop this up here for you, which is at $35.84 on November 27th. Had 4.7 million shares. Going to have more than that. Be very interesting to see how this closed. Came down on very, very heavy volume that is never exceeded, and that was on the 4th of December. They came out basically said that their sales were going to be down. The news today was that they did 3% comp store sales instead of 2% comp store sales, and but we're able to run a lot of shorts out of this market. It's going to be very interesting whether it can close above that $35.84 high. Now, give me a call, 877-927-6648, 877-927-6648, 877-927-6648.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Carol Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
And other news out here. Again, you can give me a call at 877-927-6648. That's 877-927-6648. We'll be looking at Herbalife here just quickly. Jim Chanos was out today speaking about the market, a rather famous short seller. Jim basically did back Ackerman in the bull-bear debate on Herbalife. He said that he was short pretty much from about the $70 range down and started covering into the huge down days in the around the 20th of December. In fact, let's get just a little longer. Is that 2 years? That can't be right. 3 years? There we go. This thing blew apart off about $73, and apparently I don't know if he was shorting into that time frame, but it was somewhere in that $70 range. He said that he started shorting. He is no longer short, but he said that he'd done basically the same research that Ackerman had done on Herbalife, and that he thinks that eventually he's going to get exactly what he wants. This depends on how long he wants to hold it. He basically didn't want to hold it that long. So kind of interesting. No real movement in that stock like a lot of other ones out here in the marketplace. So we'll continue to see. Got to get a drink here for a second. Continue to see how this market moves. What else did I want to say? Oh, the last out here, well, we've got a lot of stock operators, a lot of these big guys on the street. And, of course, we've got Icahn pushing Dell again. And I have to say, I have yet to see a trade where there was any downside. And I think Icahn may have found it. He, of course, is out there pushing Dell to give the shareholders a lot more money. Basically, we have a lot of companies like Apple hoarding huge amounts of cash, $137 billion now for Apple. And, of course, they just can't bring it back. But, boy, if they want to go private and they want to finance themselves with their own cash that they won't give back to their shareholders, boy, do people like Michael Dell love it. So Icahn's sitting a huge pile of cash out there saying, hey, give us a one-time distribution, or we'll figure out something else, and you can take the company private. But basically, Michael Dell wants to take things private, fix it all, keep all the cash, basically buy it with the cash that they have on hand, and shortchange his current investors. So he comes along. They've got a bid out there that's right around $14 for Dell. And he knows the worst case scenario is that he's going to pay some lawyers to harass these guys for a while. And what happens if he doesn't get any more money out of them? Nothing. He still gets his $14. What happens if he does end up in getting them to pump the stock up or give a one-time distribution? He makes some nice coin. He's got 6% of the shares outstanding right now in Dell, and he's trying to put basically the screws together on Dell. I have no problem with him doing that because basically Michael Dell was screwing over the existing shareholders by not repatriating this money or one-time distribution. If you're going private, it no longer matters. Give some of that money back to your investors. Icahn continues to run around putting the screws to people, but notice that these big activist shareholders are not going after companies that are really ill-priced. They're going after people that are way on the wrong side of a trade, and or they're going against people that are trying to steal money from basically their own company. At least that's my opinion, what Michael Dell's trying to get away with there, and some others have. That is shortchange your investors and basically make a ton of cash for yourself, especially if you can't sell those shares like it is trouble, or at least problematic for Michael Dell to do it. So what do we see? A little pop out of here. There's not going to be a lot. We basically had that little pop yesterday. We're probably going to pull back in that range for $14. The success rate's probably going to be something measured in a 10 or 20% chance of him ever getting any extra money. But if you plop down 6% of the shares on Dell, you spend a couple $100,000 for a lawyer to basically cause some problems. And for all I know, Icahn was actually selling into that for a small bounce that he got yesterday up to $14.51. We'll be back in a minute and start going through stocks. Give me a call, 877-927-6648. That's 877-927-6648. One more time, 877-927-6648.
Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91. And only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his Diagnostic Box Spread Analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Crocodile Gold. For more information, just click the Crocodile Gold banner on the front page of TFNN.com.
And as we come back, we're going to look at some of the stocks moving out here first. And Ross Stores coming out with news and dropping the Chalupa today. What do we have? They're down on 6.2 million shares already. They actually gapped up on the 3rd of January. So this is another one out here that popped for the financial cliff deal. It did it on, what was that? 7.1 million shares. I think there's every chance we're going to get into that level before the end of the day. And this is Ross, of course, the Ross store. So when Gap going up, Ross going down today, it always seems like these. It's kind of a zero-sum game for these retailers. If one does good, the other one doesn't do so well. But coming back and basically blowing away, I don't know, 20, 30 days worth of trading out here. Back to that gap back up early in January 2013, I guess is the way we'd be saying it. Anyway, take a look at this. Doesn't have much farther to go at 55.24 for the low today, coming into 52.01. You know, that's going to be the December 27th low. And if it breaks that, this thing's coming back down to probably the $41 level from September 20th of 2011 and July 5th of 2011. You've got that $41 level is really the next level down on this thing. It would have to break 52.25 with 5.1 million shares. So, you know, you've got probably $3 or $4 down. If you break that, then you've got $10 farther to fall. So, kind of interesting out here. What else do we have going? Seagate popping about, did I get that right here? Down about 3%. They were going to spend a bunch of money buying the old Solyndra plant, and I have a feeling that people didn't like the CapEx on this so much, and it's been kind of coming off. They had a clear and vibrant sell signal, 3 higher highs on lighter volume. When we look at what this does, it's pretty much a long-term top. May 1st, 2012, it did 23 million shares. It got higher, pulled back in on 13 million shares on August 17th. Again, went to 11 million shares on January 23rd, and it's pulled back into this trading range. So pretty much a line of sellers somewhere around the high 20 or 32s. And I think we're probably going to see that as they go out and spend more money. Probably a really good deal to buy that Solyndra plant that was financed by the government. Basically me and you for a business that had no chance in hell of ever turning a profit. Gold, Randgold, down about 2% today. Just not getting a lot of movement out here in gold. We've been down at these lows, and we've looked at some of these previous lows. In the case of Randgold, it basically matched the last major low, which was the July 23rd low of last year, $82.52, 540,000 shares. We came into that with about 510,000 shares. We've gone below it. We've closed back above it. But you know, you're within, what, 300,000 shares there. I suspect most likely outcome of this is a test back down to the $72.91 low of May 15th of last year. And you probably may even get a little bit more than that. I suspect that we still have a little farther way to go. But not a lot of these stocks looking real juicy out here just yet. And, of course, when everybody truly hates gold and gold miners is the time to buy them. And I think that it's just kind of like a mild dislike. Haven't wanted to divorce him yet, but certainly not happy when he comes home every night for dinner. And you want that throwing plates off the wall, yelling and screaming, pulling guns out, I hate you kind of feeling about gold and gold miners before you decide to go long again. Just at the pit and zenith of despair is gold the kind of stock I want to buy. That's gold stocks. Other stocks out here that we have moving, Netflix, NFLX. I keep watching this because I have a pretty good feeling this thing's going back to $50 one day, so it's probably going to be a great short. Unfortunately, only until they've exacted every ounce of blood and Icon has been able to distribute this thing around $200 is it going to come out. And basically the guy did the same thing that Jeff Bezos has done, which is he's committed a lot of money. He's not going to make any money. He's not going to tell you how much it's going to cost. And you can surmise. And Wall Street kind of likes that. If there's no way to pin them down to a valuation, if there's no way to know how much that he paid for that Disney content, and he's not about to tell anybody, how do you ever know what Netflix is going to be able to spend long term and how much it's going to make long term? But when you're running something like a big operation like Icon is on Netflix, it takes a while, and it's going to take him a while to actually get all the stuff out. But I think you have a great case of this coming back and filling the $100. It may take another 3 months for him to move this stock sideways, but he's got to move that stuff out. You bust the stock up, and then you go sideways. This would look like distribution in the last 5 to 10 days in Netflix, but you're probably going to need one more test of 197.62 out here, and I suspect if the market does head down, that this thing is probably going to pop. It probably still has high short interest, probably people reshorting it. You need pretty much everybody to get bored out of their gourd on this before coming after it. See what we have on the positive side out here in the NASDAQ. The likely suspects that are short that get popped out here. MU is probably the most interesting stock out here. It looked pretty poor, but things are getting much better in at least the tablet business. They are looking to go up and test this February 28th high at 916. 71 million shares then, so going to be a lot of volume to go up against, about 18 million shares, so probably a higher trading range. But this thing could be in a nicer trading range back from the $7 range up to this $9 range. Not a bad move for a trade out here, and I suspect after it rejects 916, you're probably going to see that trading range for a while. So if you like playing those range-bound stocks, might be very interesting. Let's see what else we have out here. Staples, Xilinx, ADP, S-Bucks. Not a bad move on S-Bucks today. Let's see what we've got for your caffeine fix out here. S-Bucks is, or Starbucks is up 1.5%, 4.1 million shares. So what do we got going on here? This thing's coming back into its heavy gap down. That gap actually occurred on the, April 27th of 2012, came down on 27.3 million shares. And what do we have now? About 4 million shares. So not a lot of juice, but it is coming back and filling that gap one more time. Energy's not all that bad on the way down. It's off maybe about 10% compared to that huge move down from the April 16th high of 2012 at $62 down to the low of August 2nd at $43.04. But yeah, my power law vector indicator says energy is off just a little bit. Probably better shorts out there, but this thing looks like it's maxing out somewhat. Let's see if there's anything else out here that really makes me want to jump up and down. Now, I mean, it continues to be a range-bound market over the last 3 days. We've seen this before. The pattern has been a huge gap up, decent volume but not strong, a wicked pullback, and then a higher jump. So I'm looking for a pullback to 1525 on the S&P cash, most likely tomorrow. If it comes on heavy volume, we may be able to break down this time. If not, then we're probably going to do the same thing that we did into this one. But I think that there's probably a fairly decent opportunity to pull back to 1525. I'm looking at a lot of stocks. I'm looking at the options over the last couple of days, and it really looks as if we've got a pretty good case out here for a minor pullback at least to 1525. I'm giving the odds of that at about 80%, and I suspect if we're going to get that pullback to 1525, we're going to see it tomorrow on economic news, basically the jobs numbers, which I think are going to come in fairly light. So we'll look at that. Anyway, I'm looking at the stocks that I am short right now, and they were up about 2% this morning. They're down 0.5% now. A lot of them tried to push higher highs again today, and very light volume. Some of them actually coming down with heavier volume than they went up over the last couple of days. So I think individual stocks, probably a good stock picking market out here, unless less a index picking market. But we're seeing not a lot of juice in these in the movement out here. Let's see if we've got anything else going on. Just looking at that. Well, let's look at some of the stocks that have seemed to move. Zillow, the online company, is basically breaking its previous high at $46.86 we saw on September 20th. It tried to do that on the 14th. Huge day, huge volume, but closed lower on 4.4 million shares. I like cleaner charts out here. What we did see, though, is 1.1 million shares. A close below $46.86 would be a confirmed sell signal on Zillow. Waters Corporation, another one of these that came down on monstrous volume. It's come back and tried to fill these gaps a couple of times. Last time it tried to fill this gap at $94 and 47 cents. WAT is the symbol on this one. Just a little lighter volume over the last couple of days in the 410,000 range. So at 20% light, continues to be weak. Again, you can give me a call at 877-927-6648. Kind of a quiet day. A great day to pick up the phone and give me a call. I know it is quiet out here, so a lot of people have decided to hit the golf course or maybe go outside and smell the flowers, since the market's really not moving that far or that much the last couple of days, and waiting for numbers in the morning. Again, we're up 1 point on the S&P cash, so not a lot happening. 2.65 billion shares. Again, we'd be lucky probably to hit 3.5 billion shares today, and tomorrow would be very interesting to see how those job numbers come in. But that's probably going to be the decider on whether we go 50 points up. If not, I'm suspecting we have a long-term top in place. Well, anyway, water's coming in much lighter out here. There's a few stocks out here that are making lower lows on lighter volume. I was looking at Vivus to see whether it would do it over the last few days, and really it's another one of these that's going to have to retest its lows one more time. VVUS is the symbol on it, but keep an eye on it if you want to go long. Maybe some of these stocks that have come down to the low in the next range will be the ones to run. November 15th low at $9.86, 5.5 million shares. We came into that with 5.4 million shares, and we didn't quite test it. Dime light in the test, and also volume just about the same as that previous low. So you probably have an 80-85% chance that you're going to get a test of the $8.86 low out here. And some of these stocks are moving off those. Another one that pretty much is trying to give a sell signal up here, at least a minimum or a low-term sell at the top up here, is Valero. It tried to break out on much lighter volume over the last couple of days. It is decidedly back into the trading range. Has not come back and filled this gap that's about 39.75 to 42.25. A decent sized gap on decent volume, so it'll be support. That was on the 29th of January, and you had almost 26 million shares that day. So what did we do? We went to 14 million shares on February 20th. At 47.85. We went over that in 2 days, and basically the best day you had out of those 2 days that were close was about 11 million shares. So certainly 3 million shares light on this. It's pulled back into that trading range, and I think we're probably going to see additional weakness in this energy sector, which tends to look like the weakest. I'm not much one on trading these uranium stocks again. I think this is what this is. I'm pretty sure it is. I used to trade this thing. I should know it. Yeah, uranium, commercial nuclear power centers. Kind of a one that has made a bottom out here. I suspect that we might have one more bottom out here. I haven't looked at the financials in this, but if you want to see a chart that is really set up for long-term gain, this is it. You've got it and a nice high out here with high volume in that 96 cent level. So if you like playing the pennies, USU is the symbol on this thing. Came right down to the penny, tested the previous low on half the volume. I absolutely love that. Consolidated for a few days, actually moving up a little higher out here today on a little more volume. If we get some decent news out here tomorrow, maybe a play if we know we're going higher in the market. In the housing market, we're going to come back and talk about Standard Pacific. We've been talking about this one for a little bit. Give me a call, 877-927-6648. That's 877-927-6648.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try patterns, profits, and peace of mind absolutely free for 2 weeks. Go to tfnn.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's patterns, profits, and peace of mind and get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of tfnn.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to tfnn.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of tfnn.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at tfnn.com.
Well, we're going to go to gold and silver here because we've got everybody interested. We're going to go to Sue real quick. How are you doing today?
Hi, thank you. How about you? Thank you so much for taking my call. I would like to ask you 2 stocks. Maybe I turn this one, turn it lower.
Okay.
NE and another one is SLW.
Okay. I've got 2 to get through before the end of the show here, so we're going to do, since one's silver and one's gold, we're going to try to get through both of those. We've got silver. And I was looking at the options in silver. Basically, this says that the options are pointing to a close somewhere around $33 for next Friday. So are you long this now, or?
Oh, no. I'm trying to get it in.
Yeah, I just don't see a lot of upside to this. It came down on heavy volume. You're going to start seeing heavy resistance in that candle. What you need is to get long this thing is either another test of the low, or you need this thing to break out above that February 20th day that had 7.8 million shares and actually get up above it. This looks like at least the options players are betting that this thing goes up to about $33 and dies, which only gives you about $1, $1.50 above this level. I think that may be the point at which it would be a good chance maybe to short it yet again and start making ABC down. So unless this thing shows some kind of sign of strength, I would just stay away from it for a while.
Okay, thank you.
Okay, and then we're going to go to Carol in California. How you doing today? Oh, she's gone? Okay. She wanted to look at GDX, the same thing. These people in the she's back? Oh, okay. Huh? A new one? Oh, same one. Sohan from California, GDX. Okay. How you doing, Sohan?
I'm fine, thank you. Yes, I never listened to the show, but I was looking Google and I find out you. I have one simple question. I have $20,000 need to invest for 2 years. After 2 years, I need this money back. So what I was wondering, if I can invest in the gold, what's going to be happening in 2 years? You have some little idea?
Yeah, I think that you should wait for gold to get down at least in the 1400 to 1250 range before you start thinking about any kind of long term. I think we've got still a lot of room out here. I think we're going to see the dollar index go back up to 89, and probably when it gets up to that $89 on the dollar index, you probably should be looking at gold.
Okay.
If you look at the short term, it looks like gold wants to, at least the market vectors, gold miners, want to go back up to probably, going to probably have a little bounce out of the next week or two. But again, I think we might be setting up one more ABC down. There's a little gap out here at about $41 on the GDX. This thing's probably going to bounce into that level, and I'm going to be looking at probably shorting it at that level.
Oh, okay.
So I think you've got plenty. I think you've got plenty of time. I would not rush into it. I would wait until everybody screams and hates it so much, like I said earlier, that you want to have absolutely nothing to do with it, and that's probably going to be the time to buy gold. I think people, as long as I still get phone calls like this, I think it's probably too early.
Okay.
Okay.
All right.
When no one's talking about it, that's going to be the time to buy it. When everybody hates it and everybody says it's going back to zero. Okay.
Okay, I got it. Thank you very much.
Yeah, I think you're going to get that. Anyway, we've got about 40 seconds left to go here. Wanted to check one more time out here. Yeah, I think everybody's in it. I think we're going to get a washout. That washout's probably going to come from some of these big investors if the market in general turns on them. We're printing off here about 2 points higher on the S&P, 2.7 billion shares. Just not a lot of movement in this market. Pretty low movement. What can you say? It's all going to be about the numbers in the morning. I think we're going to have action. So rest up, go to bed early tonight. We'll see you tomorrow. Same bat time, same bat channel. See you then.